Vince Farrell, Michael Pinto, Jerry Bowyer, Stephen Abrams. So now the big question is, we don't like commodities, except Pinto, who might be right, incidentally. He's had good calls. He's been a tough, hard money contrarian, and he's still like the gold play.
Smart guy.
But let me ask you, what's been doing better? I mean, investor preferences are shifting away from commodities. Financials have been looking better. We're going to put a chart up. Healthcare, tech, even retailers.
Even retail.
I want to ask you, what do those sectors look like? Can you rely on them? Now, there's the healthcare. Let's start there. This is an interesting one. At least the short-term trend is very good. It's positive. It's up. And we've seen strength across the board, sometimes in the drugs, sometimes in the HMOs, sometimes even in the biotechs. What's your take on this? Just real fast.
When you have a downtrend like that and you spike above it, the best place to buy is when you come back and test that support area, which you probably will do. This rally has been so wonderful. Don't get carried away with it. You expect some consolidation, but it looks like it's broken through, and it put up a lot of different industries that are going to look the same way. So you might want to get your toe involved a little bit in that water, but save some money for the inevitable retest of where we were just a couple of weeks ago.
Even quicker, retailers. We're going to put a chart up on the board. Now, retailers are not showing an upside breakout, but there's some positive movement. There's the S&P retailing sector. What do you think of retailers? I mean, this is the beleaguered consumer that Stephan and everyone is kicking around on a daily basis. Is it possible that the lower oil prices, which constitute a big tax cut effect, right, $3.88 at the pump, down from $4.20-something, and it's going to go lower, could this bail out consumers and therefore retailers?
Wages up about 3.5% the past year, but headline inflation is greater than that. Take headline inflation back down to core rate of inflation, which is where we typically are, and that would happen if oil goes down. Then wages are above the core rate of inflation.
You like it?
Selected retailers you should be looking at.
Sears up big?
Sears is not a retailer.
Macy's? Kohl's? Target?
A Macy's type, a Target type, Walmart type would be what you want in your portfolio.
Low end, still low end. What about the home builders? What about the home builders?
I don't have the guts for the home builders.
Nobody does.
They're probably going to triple, but I'd rather buy the banks.
I mean, you look at home builders today, Lennar, Pulte, Hovnanian, KB Home. Stephan Abrams, distinguished veteran that you are, since you've taken us out of commodities, where do you want to put us into?
Well, we've bulked up our healthcare position, healthcare services, biotech, those two areas in particular. We have no big pharma. It's not of any interest to us. We've bulked up our domestic infrastructure plays because I think the next president will have a mini WPA. And there'll be a lot of work on roads, bridges, tunnels, electric grid, etc. in this country.
How about private roads, bridges, and tunnels? How about private?
Well,
capitalism.
Listen,
private capital, private builders, private toll roads.
Look, that's a great idea. I'm all for it. But one way or another, we're going to have to do a lot of work there. We've also bulked up our transportation holdings, air freight, airlines, railroads.
Betting on the lower oil. Betting on a continuation of lower oil.
It's the reverse trade, absolutely.
Jerry Bowyer, just quickly, what if this drill thing doesn't pan out? What if it's a big head fake? You know, basically what I understand it is Democratic leaders in the Senate and House, Harry Reid and Nancy Pelosi, are saying, you guys have to make a vote to their rank and file. Go ahead and make a vote for drilling, but it's not going to pass. We're going to stall. We're going to run the clock out until we get into next year. And then we're going to pass environmental, alternative fuels. We're going to kill the oil companies. We're going to have windfall profits taxes. And they won't produce a single ounce of new oil, Jerry. What if this whole thing's a head fake and oil goes back to 150 or 170?
Well, the thing is that the United States Congress, thank heavens, isn't in charge of the whole world. They're only in charge of the United States. So if they keep us from doing drill here, that doesn't mean they can't drill in Mexico and drill in Venezuela and drill in Canada and drill throughout Asia. So we're going to get oil prices down no matter what the United States Congress does. The question is, who's going to make the money on it? Who's going to actually hit the revenues? Where's the profit going to be made by foreign companies, or is it going to be made here? But I don't see us back to $150 oil, but I do think the Congress will, in fact, run this one out. They're going to fall on the ball. Environmentalism isn't a political idea to them. It's a religion. And you don't change your religion when oil goes up $20 or down $20.
Mike Pinto, you're the alternative investor here, so where are you going to go now? Where are you going to go?
Well, as you know, I've been shorting the Treasury market and playing that spread. When yields go on the 10-year to about 3.8, You want to start shorting it. Has anybody noticed the massive increases in deficits? 2009 deficit is going to be almost $500 billion.
Do deficits matter?
Of course they matter.
Really?
Of course they matter. $500 billion. Let me ask you a question.
Do they impact deficits or high?
Well,
how come rates are so low?
How are we going to pay?
We have,
in order for Americans to continue their standard of living, we have to find somewhere $59 trillion.
Let's just grow our way out of it.
Can you grow your way out of a 50? Right now, your deficits are running about $500 billion. Over 70 years. You're correct.
But let me ask you, you're short treasuries. You're short treasuries. That's what you're saying.
The debt is increasing, and the only way we're going to be able to. So when you increase the supply, yields rise.
Yeah, I don't agree with that, but I just want to know what you're doing. You're long gold.
Yes, I'm long gold. Have been long gold. I'm getting hurt lately.
But are you buying on this gold?
And I am accumulating on the dips. Absolutely, because you have to understand.
Gold go?
I wouldn't be surprised if $850 an ounce.
Would you buy oil back here? Would you buy any of the energy stuff back here?
Not yet, but I would nibble maybe in a few months.
When you saw the Federal Reserve minutes today, what was your initial response? They dropped the ball.
They should have kicked inflation right in the teeth. They had it on the mat. They should have stepped on its head, and they dropped the ball.
And you think that's it? No more? The rates are on hold forever?
Rates are on hold as far as the eye can see.
So you're staying in your high inflation
camp. When
camp.
the Fed raises rates, it doesn't happen by osmosis. They sell treasuries and take money out of the banking system. Does anybody believe that the banking system now is capable of having money drained from it at this juncture in time?
Yes.
I wish that was the case. I'm just trying to be realistic. Jerry?
Last word, Jerry. Last word, real fast.
Yes, most banks don't need all that liquidity. A few need it. Most banks don't. There's too much money out there.
Merrill Lynch just sold the CDOs, senior tranche of CDOs at 22 cents on the dollar, and they had to pay somebody to take it off their hands.
That could be the bottom. We got to get out of here. But that could have been the bottom of the whole thing. I don't know. That Merrill Lynch thing, when you look back, the government backstop for Fannie and Freddie, the government backstop for Wall Street, those are all important bottoms. Now the question is how the cards are going to play out. I think commodities are dead right now, as long as drill is alive. Anyway, Vince Farrell, thank you. Mike Pinto, Jerry Bowyer, and Stephen Abrams, I appreciate it.